Okay, in this video, I'm going to show you how to work requirement 2 and requirement 3. So for requirement 2, we see the income statement, and the manager is surprised that the T205 product line is not profitable. The division accountant estimates that dropping the T205 product will decrease fixed costs sold by $75,000 and decrease fixed selling and administrative expenses by $10,000. Prepare a differential analysis to show whether Division B should drop the T205 line. So we're going to look at that requirement, and let's just look. This is the T205 product, and this is the revenue from it. If you look in your textbook on page 1420, it will show you how to perform a differential analysis. So let's look. I've already set this up for you in Excel. Let's look at requirement 2A. Now, we are going to expect a decrease in revenue if we do not sell this product. And if you look in your textbook or look here on the ebook, if we don't sell this product, we will have a decrease in revenue of $310,000. So you will just copy that number down. And then an expected decrease in total variable cost. So we can look at, let me go back, sorry. A decrease in total variable cost of $31,000 and $68,000, and you just get those variable costs from up here. Since we're not making this product, we won't have those variable costs. So you would show right here, the calculation show 31 plus 68,000 and then put 99,000 here. That's what it would add up to be. And then your expected decrease in fixed costs, that was given to you in the problem. Fixed costs 75,000 and 10,000. So you would show that 75 plus 10,000 would be 85,000. You would put it here. And then you will have a formula here that will add your cost up for you. So your decrease in revenue, when you put that in, you would have to put in 300,000 with parentheses because it is a decrease. Okay. And then here you would add up your costs and you would put your, we lost revenue. So revenue lost, usually revenue is a positive number, but if we have a loss, we have to make it, put parentheses around it, it's a negative number. Add up your total fixed costs. Now these are total cost, so you don't make it negative. The only reason the revenue is negative is because it is loss. Add those two up, enter those costs, no parentheses, add those up, and then you will see that operating income is going to be a negative number, so operating income is going to decrease. Okay. Now, if you look at requirement B, what is your recommendation for the manager of Division B? Well, if you look on page 1421 at the decision rule, it says if the revenues lost is more than the total cost you would save, then you don't want to drop the product. Well, let's think about it. We're losing 310 revenue. We're saving cost of variable of 99 and we're saving fixed of 85, and I can go ahead and tell you that 99 and 85 is the cost we're going to save is a lot less than the revenue that we're going to lose. So I can tell you that your answer should say that we can't drop this product. And you can tell that revenue, this should be 310,000 here. I had that wrong. You can explain that Division B should not drop the T205 product line because if it's dropped, tell how much operating income is going to go down, tell how much revenue is going to decline, and then tell that these numbers, that revenue is more than, we're going to lose more revenue than we're going to save in cost. That would be your explanation. Pretty straightforward there. But if you have a question, just message me and I can walk you through it. Now, for question number 3, to me, this is one of the easier problems. Here's the unit, sale price per unit, the variable cost, and the contribution margin. So all that is right here for you. And it says that the factory has a capacity of 4,700 machine hours per month. That means that's the most they can produce per month. That's as fast as their machines go. So it wants us to identify the constraining factor. If you look on page 1421, constraints are factors that restrict the production of sale or a product. So you can see that constraints can be labor hours. Workers can only work so many hours. You only have so many employees. So that could be a constraint. Machine hours could be a constraint, or available materials could be a constraint. That could limit us on how much we can produce. So obviously you can see what the constraining factor here is. So all you need to do is tell that the constraining factor for Division C is machine hours, because they pretty much told you this. So that one's easy. Now for 3B, prepare an analysis to show which product line to emphasize. Now if you look on page 1422, it says which product to emphasize, the decision rule. It says to emphasize the product with the highest contribution margin per unit of the constraint. Okay, the highest contribution margin per unit of the constraint. Now, look down here and you can see that the plant can manufacture either 40 units of K707s or 62 units of G58 2S per machine hour. So we need to look at that. It's only capable of doing 40, either 40 of these or 62 of these per machine hour. So that is very important. So when we calculate here, units produced per hour, we just said that you can only produce 40 of these, 40 here, and then 62 here, I believe. 40, yes. So make sure that that is what you put. And then put the contribution margin per unit. Here it was $60. And on the second one, it was $29. So $60 here and $29 here. And I've already put the formula in. Units per hour times the contribution margin per unit. Now, once you calculate those, that will help you make your decision. So let's look at explanation 3B, what we need to say. Prepare an analysis to show which product line to emphasize. So what you need to do here is explain, when facing a constraint concerning which products to emphasize, the decision rule is to emphasize the product with the highest contribution margin per unit of the constraint. You can put that sentence in there. That sentence is also on page 1422, or you can play this video back to type it. Let's see how much time I have. I think I'm okay. Okay, I'm not sure what happened there, but I was just saying how you would take your units produced per hour, which was 40 and 62, and your contribution margin per unit, which is 60 and 25, and these would be multiplied, and that would give you your answer there. Now, the explanation is on page 1422. When facing a constraint concerning which products to emphasize, the decision rule is to emphasize the product with the highest contribution margin. So whichever one has the higher contribution margin, the dollar amount here, that's the one you want to choose. That's the one you want to emphasize. So tell me which one has the higher contribution margin, and you need to emphasize that one. And that is all the requirements for 2A, 2B, 3A, and 3B.